All right, and welcome to this weekly recap video here from sellthatoption.com. My name is Ryan Bowyer, and I am the founder and head trader here at sellthatoption.com. One of the things that we do each week is we send what is called a weekly strategy recap video. And so what we do there, and I'm going to show you here in just a second because you're watching the video, but what I do there is I go over my current portfolio with all members. And so I go into exactly what it is I'm looking at for the week. I go into strategies and securities that are performing well for me. I go into how I'm looking at adjusting trades. If there are also particular securities or stocks of interest that I'm really looking at making a move, then I'm also going to highlight it here. So that's one of the things that you're going to get if you ultimately sign up for a subscription here at sellthatoption.com is a weekly market overview, weekly portfolio overview. Because we do swing trades and we primarily sell options here at, as our name suggests, sellthatoption.com, we have the opportunity to make really methodological and mathematical decisions based on what it is that we're seeing in the market. And so I go over all of that every Saturday or Sunday with our members. Okay, so let's say you were to pick up a subscription here at sellthatoption.com. Let's take a look at exactly how you would get there prior to getting into this week's strategy recap video. Okay, and if you're logged into your account, you would simply go here to members and then click weekly strategy recap, which does bring us to this page. Now, what you'll notice is that the very most recent one is the first one, and so you simply click play and you will get the weekly strategy recap video. That again gives you everything that I'm looking at for the week, how my positions are doing, whether or not I'm thinking about adjusting any of my positions or whatnot. After the expiration period, I do upload all of these videos to YouTube. That way you all can see the progression of the positions, take a look at securities that we were successful in, take a look at securities that we were unsuccessful in, because my trading is 100% transparent. Okay, now, if you have any questions, please feel free to reach out to me at Ryan, R-Y-A-N, at sellthatoption.com, or click below here and leave me a comment, and I'll be sure to get back to you. And as always, stay humble, stay hungry. Here's to our success, and enjoy this weekly strategy recap video. All right, and welcome to our strategy recap. Today is December the 9th. It's Saturday. I've got some plans tomorrow, so I wanted to go ahead and get this out a day early. So let's go ahead and talk about the markets real quick right now. As you know, we have been in an uptrend really since Trump got elected. Every time we think that we might see some topping, we know that it's just not happening. And so I do have our 5 EMA in purple on each of our charts, and then I've got some basic moving average lines. As you can see, we're above all of the basic moving averages. Really, again, we've been in kind of a major uptrend. Of note, the IMW is showing some interesting candles. It recovered basically the entire nasty candle from a couple Mondays ago, in which we saw a massive VIX spike. But really, at the end of the day, until we see major breakings of some simple moving averages, we're just going to continue in this streak of an upward movement and continue to consider ourselves in a bullish market. Let's take a look at the VIX down there. The VIX has retraced all the way back from that major spike. We are now closed below 10, the VIX. This past Friday, so yesterday, we did see a new all-time low for VXX. And so we're just continuing to stay in this bull market. And so that's going to certainly impact the way that we trade. We here at Sell That Option aren't in the business of trying to call tops or anything like that, or bottoms. We're just going to trade really what we see. So these are the markets. There's really not too much to say except the status quo continues. And we're not going to be the ones that try to call any tops or anything. Okay, let's take a look at implied volatility, and then we're going to get into our positions here in the Sell That Option portfolio. All right, as you can see here in our implied volatility percentile levels, we have some securities that are elevated right now. Thankfully, we're in each of these, as we're going to see. One of the things that I do want you to notice, though, is that implied volatility has stayed relatively high, at least the percentile, for a number of these securities. And so what does that mean? That means that we initiated some of these positions for January a little bit early. So we entered them between 2 and 3 weeks ago for January expiration, which is now in about a month. Okay. And so we were a little early, but what's important for us to know about that is that one of the reasons we haven't seen some of our positions go off yet or take them off for profit, although I think it's going to happen some this week, is because implied volatility levels have stayed elevated. And we know that when implied volatility levels stay elevated, this means that our options prices are going to stay elevated. And so when we're selling options, we of course want to sell them high and buy them back for less money than we sold them for. However, right, when implied volatility levels stay high, that means our option prices stay elevated. And so while we're getting some time decay, we're not necessarily getting that implied volatility crush is kind of the colloquial term. We're not getting that implied volatility crush when we sold them high. In fact, some of the implied volatility levels are still elevated compared to when we initially entered, or they're higher compared to when we initially entered our positions. And so this is important because for some of these securities, if we do get a drop in implied volatility levels, we're going to see pretty significant and pretty rapid profit taking, I think, in our positions. So we do have positions in EWI, UNG, FXI, XLF, XRT. We don't have a position in EEM, which is something that I might look at initiating. I've kind of stayed away from SMH. SMH has been a security that I haven't traded particularly well. EFA, of course, we always have a position in. XLP, we have a position in. The Qs, IMW, XOU, and IYR. And so we have some decent positions in these securities. And so I'm really excited about where some of these positions are. And so let's get right into our portfolio. That way we can see exactly what it is that we're going to do. Either managing positions this week or taking positions off for hopefully a profit. All right, let's do it. All right, and so what we're going to do is we're going to start here with our securities that we have not yet adjusted. That way we can spend less time talking about some of those and more time talking about our adjusted positions. Okay, here we are in XLU. XLU currently has a probability of profit at 60.53%, right in the middle of our securities. And so with every straddle, we look to take them off at 25% of profit. And so I feel really good about potentially taking this one off this week. Okay, let's take a look at XLP. Okay, so XLP is a security that we have adjusted, and so we're going to come back to XLP. All right, XLI, also a position that we have adjusted, and so we're going to come back to XLI. Finally, XLF. XLF currently has a probability of profit at 56.20%. And so we got really nice wide break evens. Again, I'm probably looking to take this one off at 25% profit from this straddle. So a couple $100 here. Not a huge position, not huge risk that we took on in this position, but probably going to take it off for a couple $100 here in the next hopefully a couple of days, because we are nearing that area of profit. Okay, so these are the first couple. Let's keep moving. All right, and VIX, VIXs are the easiest trade for you all to probably understand. All you got to do is watch our our course lecture on it, and you'll understand exactly what it is that we're doing when we are trading the VIX. Okay, let's take a look at UNG. UNG, rough. So I'm currently down $2,400 on UNG. So I was really playing UNG to stay above 6, and we've seen it pretty drastically decrease under 6. I am going to write a note for us to come back to the UNG chart here momentarily as soon as we're done looking at all of our risk diagrams, because I actually think we might be seeing a reversal in UNG. And although I don't really like to buy options, I might pick up some options, and I'm going to show you exactly what it is I'm looking at here in UNG. All right, in the Qs are looking great. We're going to look to manage this one at 25% profit. Now, we've still got a month left on this trade, and, we might get there. We might get there a little early. Maybe not this week, maybe in the next couple of weeks, because, we are looking at $300 or $400 of potential profit on this particular security. OIH is looking great. We've got huge wide break evens, current probability of profit at 69.13%. And so looking really good here. These are just two straddles, and so that's why you're seeing that area. We've got individual orders to take these off, but we are probably going to look at taking off this trade here in maybe in the next 2 weeks or so. Really not needing to do anything since we've already laddered into this position. As you all know, I have a semi-love affair with IYR. Interestingly, IYR, as you can see down there, we have two positions on, one for January, one for December. And what's interesting here is that we are actually in the 25% probability of profit for December. It is coming up, and so we're going to have to do something with this position anyway next week. But it's actually going to come off. I had actually entered the trade incorrectly on the first hand, and in my review, I actually saw we're at about 28 or 29%, and so I've already entered that to go off at 25% for Monday. We'll likely get a better fill than what I've entered it in for, so we are going to take off IYR profitably. IYR is one of those that I really like to trade. I really like IYR. I think it's a fantastic trading vehicle for us. And it's pretty predictable. Housing market's relatively stable right now, and I'm not seeing anything in the news that worries me. And so we're just going to keep doing this through IYR week in and our month in and month out to generate that income for our portfolios. Now, as you can see here, IWM for January has been a security that we've laddered into. As a result, we're still technically down, and so we're probably going to continue to have to hold this security. Right now, we're feeling good about it being a profitable trade. If it does get up to that 156 level, we'll look to adjust. But right now, we're just letting time decay do its thing. Not really worried about this position currently. All right, FXI China. So China has seen a huge move, and I'm actually jotting it down to take a look at China here in a second after we're done with our risk diagrams. But China, so it's had a massive move, 10% or so in the last couple of weeks, which has kept IV relatively elevated. But we are hopefully at the down part of that move. And if we are, then we're going to look for implied volatility to decrease as it becomes a little bit more stable, which means our option prices are going to go down. And then the other thing is that we're going to see, if we see a move up in the security, what we'll see is it enter back closer towards our short strikes, which is good, which means we'll recenter over the position and hopefully have a chance to take this off at 25% profit. All right, EWY, we're looking pretty good here. Less probability of profit right now, simply because we're a little bit on the lower end. But even though it says 41.78 with early management, I feel really good about it. We are still $3 or $4 away from our break even on our low end. And so we have really wide break evens here in EWY, and so we're just going to continue to let it do its thing. All right, now EWJ is one that we'll look to take off pretty soon here. We're actually feeling really good about this. 72.14% probability of profit, and we're really close to the 25%, and so I really like where this trade is at. EFA is another one of my favorites that I love to trade. Really easy trade here. EFA has been a slow mover up, and with less credit, it's been a little bit difficult to trade over the last 3 or 4 months. However, feeling good about where it's at. We're right close to our short strikes, and we're just going to continue to let time decay do its thing here. And then last, DIA. So DIA, we are up about 2,000 from selling some options originally, and so the security is in a decent spot for us. If the security stays right where it's at, we'll end up profitable on the trade. With that being said, it did move beyond our short strikes, and we did have to adjust it pretty significantly, taking the 234 put all the way up to 242. And so we did see a pretty significant move in DIA. We'll take this off this week and probably just let it run its course to expiration, buy back the 234 call, let everything else expire worthless, depending on where it's at. We also might need to sell the 241 call, but let the 227 and the 242 put expire worthless for us. on this. Okay, let's actually get into UNG. Let's talk a little bit of strategy in UNG. Let's talk a little bit of strategy in FXI. But other than that, there's really not a lot of strategy that we need to be discussing and kind of things that we're going to be looking at into next week. As I see things throughout the week, I'll be sure to let each of you all know kind of what it is I'm looking at. But really, our portfolio, as you all just saw, is sitting really nicely. We've had a really good month thus far in December, taking some stuff off. We took off a VIX trade yesterday for about $1,200 in profit, which is a great start to the month. And so everything else, we're just letting time decay do its thing. But really, we're feeling pretty good about the positions that we have in our portfolio. And we are feeling really good just about kind of what we've done setting up for December and January. Now, as we do take things off, we will look to reuse that buying power. And I will be sure to send out that information via the email as soon as we do make some of those trades. Okay, let's get into UNG and FXI. All right, let's take a look at FXI. As you all know, that our short strikes are centered at the 47 call put. So we do have a straddle at 47. We popped back up to 45.54, which is where the security is currently trading. Now, let's take a look here. So our high on the chart is 48.36. And that happened just before Thanksgiving, so the 20th or the 21st of November. Now, since then, we've seen it crash, FXI, which, again, is our large cap China ETF, from 48.36 all the way down to 44.50. And so that's a 10% move in what essentially is the S&P 500 or the Dow Jones Industrial Average or some major ETF for us here in the United States. And so this is important because this is a large major Chinese ETF. Okay, now, what's important to note is that we did see a massive gap up right before that. And so you can think that it might just be a correction. But one of the things you'll notice here is that we do have our implied volatility level. Okay, so IV is our blue line over our chart. Okay, and so what I want you to notice there is that we see that implied volatility started to spike as the security moved down, and so we're starting to see less implied volatility as the security is starting to stabilize a little bit. Okay, now what we'd like to see is we'd like to see implied volatility fall back down to the 0.17, 0.18 area as the security moves back up to 47. If this happens in conjunction with one another, we'll be able to take that trade-off that we were just talking about very, very quickly, okay? And so we'll be able to take that off for a profit. So that's exactly what we're looking for here, less implied volatility, which means our option prices are going to decrease in value, plus a move back up towards our short strikes, which means that the security will be as even as possible. Okay, so this is FXI. Let's take a look at UNG. And here in UNG, we're actually going to take a look at the hourly chart versus the daily chart. All right, now here we are in an hourly chart in UNG. Now, I like the hourly chart a lot, and I also like to utilize simple moving averages on hourly charts. Okay, so one of the things that we're going to talk about here is the fact that we saw a pretty significant stabilization on Thursday and Friday of UNG here. Okay, and so what you're going to see is that we've pretty much stabilized right at that 550 range. Our low, we really only got below it for our 549 a couple of times. Really, 550 stayed as pretty decent support. Now, there was very, very little actual movement. You're looking at 1 or 2% movement over the course of the day, which is a couple of pennies over Thursday and Friday. Now, what I'm going to be looking for here is I'm going to be looking for this purple line, which is the 13 hourly cross over the 30 hourly, and that's going to signal a reversal for me back up towards our short strikes, which are all centered at $6. Now, we have about a month left in this expiration period. Now, we are in the winter months, which means intuitively that natural gas, which is what UNG tracks, should be higher in demand. However, we've also seen a huge, and I'll bring up that chart here in just a second, we've seen a huge overall downward movement in UNG. Now, I played this in order for the $6 area to act as support, but what we've seen is that we've seen 6 has no longer really acted as a support level. We've seen it test over and over and over again and stay, and this time it broke. And so my game plan, and this is what I would maybe think about if you were also in UNG here and you have utilized a similar strategy as to what I have utilized. My game plan is going to be, as soon as we get towards 6 again, if I'm break even in the trade, I'm probably just going to take it off. I don't necessarily know that I trust UNG to stabilize here and then move back. I'm just going to go ahead and take a break-even trade if I get it. Now, one of the other things that I think is really important for us to note is I don't often buy options, but if we see that 13 cross over the 30, I'm probably going to go long UNG. Either UGAZ, which is the triple leveraged ETF, so I might jump in UGAZ. I also might, and that's UGAZ. The other thing I might do is buy in the money, so $5.50 or $6 calls, in order to see if I can't get a quick bang for my buck here just playing this reversal. The other thing that I might do is if we end up getting muddied moving average lines, so muddied in that they all kind of converge in an area, so between 550 and 560 or something like that, I also might pick up some 550 calls a month or so out in order to try to get that move back up to $6. Okay, so this is kind of the two most interesting securities for me right now, FXI and UNG, just in the stuff that we typically play and what we have in our current portfolio. I'm not really looking to get into too much until I take a couple of these December positions off, which will be next week and hopefully early in the week, and then I'll fill out some of the rest of that January portfolio, and then we're getting close to beginning to fill out February too. Now we're about 65 days, and so in the next 2 weeks we'll really begin filling out some of that February portfolio as well. Now, as always, if you have any questions, please feel free to reach out to me at Ryan, R-Y-A-N, at sellthatoption.com. Let's finish the year strong, right? Let's take off some of these trades profitably. Let's finish this year out strong and continue to do what it is that we do, averaging a trade a day or so. And if you have any questions, reach out to me. Otherwise, as always, stay humble, stay hungry, and here's to our success.